Good morning from our global headquarters in New York. I'm Manus Cranny. Welcome to Bloomberg Brief. Let's set your agenda. A Bloomberg scoop: the U.S. is set to impose tariffs on Chinese EVs and strategic sectors as soon as next week. Benjamin Netanyahu says Israel will stand alone in the fight if it must, after Biden's withholding of a bomb shipment. Plus, details on Apple's ambitious plans to infuse its devices with AI capabilities. All hail AI, and all hail the prospect of more rate cuts. That's what took you to up over 5,200 on the S&P 500. Is that what is the definition of risk as we go to the Friday? That we are bulled up on two potential rate cuts from the United States of America? Doug Ramsey over at Luthold says there's another 10% left in this market if this construct of a bull market remains. GDP now is at over 4%. I know it's a volatile number. Keep an eye on Tesla, never far from our mind. Stock is up 1.25% at the moment. Two different stories here. One is that BP could be interested in buying the supercharger complex here in the United States of America. And there's a new fresh headline from Elon Musk. He's going to spend $500 million on, you got it, supercharging. Yes, he axed everybody last week. 500 people went, but he's in there with $500 million. Bonds, the 10-year auction, the 30-year auction went mighty fine, 2.49 times bid to cover ratio. So that's pretty much at the money. Daily of San Francisco asks for more time. This bond market is prevaricating at the moment. Does it bank on two cuts or potentially a little bit more? Oil is bid up a third of 1%. Goldman Sachs talk about an extension of the OPEC Plus agreement coming up. You're above the 100-day moving average, and Macquarie see a ramp up in Middle East tensions as abating, and so therefore your supply risk is a little bit lower. We're bid on Brent this morning. As I say, a lot of the complex is all predicated on this return of the rate cuts, and that's on the jobless claims from yesterday. One print, and the home market reprices. Anyway, President Biden is set to unveil fresh tariffs. As I said, it's a Bloomberg scoop on Chinese EVs, batteries and solar cells as soon as next week. Craig Trudell is with me. So what exactly, Craig, good morning to you. What exactly is the Biden administration planning to do, and why now?
Yeah, I think this is really a move on the Biden administration to, keep in place existing tariffs and in some cases implement some new ones and do so in a targeted fashion to really hit industries where China, has potentially a competitive advantage. And I think, EVs and batteries being front and center there, at least in my little world, I do think that, we've seen the car industry make quite a bit of noise about the threat that is posed by Chinese electric vehicle makers, even, from the likes of Elon Musk, really sort of tipping his cap to just how competitive these companies are, how low they manage to bring costs. And, I think a real concern on the part of union members of a union like the United Auto Workers of, the possibility that this industry, could, disrupt their workforce and really have an effect on employment in the U.S.
Yeah, I mean, I suppose if we go back in time and we look at those Japanese manufacturers, and the same arguments were made by many countries, and then we had what was called competition for the consumer. There you go. It's a radical thought. Now, talk to me about the impact that this could have on the EV sector in China. How could this really come down for BYD?
I think what's really interesting here is that a company like BYD has already sort of viewed the U.S. as really closed off to them. And, the U.S. administration already, under Trump, raised tariffs to a significant degree on Chinese vehicles. There's been, talk and looking in Washington at increasing tariffs and blocking EVs on national security grounds. So I think, we're in a state where these companies already have sort of ruled out the idea that this market is attractive to them. They're looking more so at Europe already. And I think even as we potentially see incremental tariffs here, it will still be a more open market than the U.S.
OK, well, it's certainly not going to go away, the whole issue of tariffs, targeted or broad, depending on who's in that White House in a couple of months' time. Craig, thank you very much. Craig Trudell setting the stage with the Bloomberg Scoop. Sonja Marten is my guest this morning, head of FX and monetary policy at DZ Bank. You know, Sonja, the road to hell is paved with good political real intentions, isn't it? And here is the Biden stall. We understand we'll get more details next week. But either way, tariffs are going to live, and they're possibly going to live longer and higher if there's a change of administration in the White House. We're seeing a small reaction in high beta of Aussie and yuan this morning. But your first take on the prospect of more targeted sanctions, on more targeted tariffs, excuse me.
Well, I mean, obviously, the big question is, why is this coming now? I mean, as your commentator just mentioned, I mean, it's sort of been the Biden's administration's policy to have tariffs in place. I mean, they haven't exactly been much kinder in that regard than Trump is. But now there's an election coming, and I feel that maybe this is also an attempt to take away some of the trade discussion away from the Trump camp, and to show that the Biden administration as well would still take action vis-a-vis particularly China. As far as the currency market is concerned, as you mentioned, there hasn't been much of an impact, and I think there won't be, because currently, well, first of all, we're still lacking some detail, but also I think the market is really looking for the election and the threat of a Trump win, which would then, of course, mean probably an escalation of the whole tariff situation, and that would have a much bigger impact on this market.
Will it have a much bigger impact in terms of inflation? I want to get a sense from you of where we are. Yes, we saw quite a bit of a shift in narrative. 1 week's jobless claims of over 230,000. Apparently it's because the New York schools closed for a break. But I want to get a sense from you. A lot of the idiosyncratic data at the moment is bumping into one another, isn't it? And this is what Veronica Clark had to say over at Citi. The evidence is building that the labour market is poised for a sharp weakening. Labour market indicators are flashing yellow or red, and they're raising concerns about a non-linear rise in unemployment. Now, as Danny and we chatted to one another this morning, she'll be on later, this brings back the dual mandate aspect. It could make a reappearance. You've got to cut for jobs, not for inflation. Are the indicators flashing yellow for you at the moment? Is there enough there to be worried?
No, I don't think that it's fair to say that they're flashing anything at this moment. I mean, we have seen a couple of slightly weaker prints, slightly weaker. I mean, this labor market is still very, very strong. And it's just one of those things that we've been seeing for the last 6 months. I mean, markets just rushing from one extreme into the next. I mean, Remember earlier this year, 160 basis points of rate cuts were priced in, and it's all been priced down. There was talk about rate hikes. Suddenly we get 2 or 3 prints of slightly softer data, and everyone's rushing to the opposite direction again. It's just uncertainty. I think people feel very unsure about where things are going to go, and I think have very little conviction, and with this leads to these massively volatile swings. I mean, the US is obviously experiencing a very, very mild slowdown, but I mean, I don't think we're at this point where we have to talk about flashing warning signals. And I think, let's be honest, we've been sort of waiting for this labor market to weaken for a really long time. And I think at this point we can probably safely say that a massive weakening isn't going to happen.
Okay, and with that backdrop, I mean, the dollar has been exceptional. US exceptionalism is a dominant force. Divergence and Fed remaining higher for longer relative to their peers. I look at the G10 complex. There's not one currency has challenged the dollar. The yen's on its knees. The Swiss franc is under pressure. And the Norwegian krone has also dropped by over 6%. So if we're at 2 cuts in the USA and 3 potentially in Europe, do you throw in your parity call? Because you say the euro has held up quite well. So I'm curious to get an update. It's like we bring you on once a month. What the heck? Why not? Let's have an update on the parity call.
Well, we still have we have the Trump parity call. If Trump wins the election, we still think that the euro has significant downside. But assuming that Biden wins, and over the next few months as well, I don't think that's going to happen. Simply because as you mentioned, the market is pricing in 2 cuts for the Fed. It's pricing in 3 for the ECB. We've seen this all being priced in, and we're still trading where we are trading today. So I fail to see the surprise. In Europe, if anything, the data has been slightly better than expected. I mean, it's a mild recovery from really low levels, but it's getting better. And in the US, I think we've priced in about all the good surprise, or the positive surprise that we can. So I don't really see what's going to push your dollar down, unless, of course, we get a clear lead for Trump in the vote and in the polls, and I think that will be dollar supportive. But unless that happens, I'm not a big fan of the parity still. Okay, well, we just thought we'd check in with you on that. Now, look, I applaud everybody in this market. I applaud bond traders, equity traders, but I hand a gold prize to the FX traders, because they just want to test
the Bank of Japan and the Ministry of Finance are going, come on,
yes.
come on. Come on, is that all you got? 60 billion. Show me a little bit more. I mean, if you look at Ueda, I mean, nobody really, he's losing credibility because he's talking about a monetary policy response. So he's vaulted from, a dovish situation to talking about a monetary policy response, and still the FX market go, sell yen, sell yen, sell yen. So where do they test him, and do you think he still has credibility?
Well, we've always said it's going to be a really risky business to intervene because there's a fundamental reason for this, for why the yen is so weak, and that has to do, obviously, with still the ultimately still very expansionary monetary policy stance in Japan. Also has to do a lot with the massive spread differential between the US and Japan, and that's all still in place. So unless the Bank of Japan is willing to come out and actually give us a timeline on a reduction of asset purchases, which is ultimately, I think, what they probably need to do, then the yen is going to remain weak. And at this point, as you said, it's become kind of a game between the MOF and the BOJ on one hand, on the market on the other hand. The best they can hope to achieve, and one arguably could say that they have had some success with that, is to stabilize the yen at low levels. But if they should try to aim for an appreciation of the yen, I think that's going to be a massive uphill struggle, unless, again, they are willing to take a bigger leap in terms of their policy stance.
Sonja, great to get you with us to close off the week. That is Sonja Marten at DZ Bank on the FX markets. Other stories trending on your Bloomberg terminal this Friday morning. The UK bounced back strongly from a recession in the first quarter. GDP rose 0.6% compared to the previous 3 months. That was above all expectations. The figures provide some relief for the Prime Minister, Rishi Sunak, who has so far struggled to deliver on his promise to grow the economy. The SEC is scrutinising statements from Boeing made about its safety practices. That was after a panel blew off a 737 MAX 9 in January. The investigation is focused on whether the comments by the company or its executives misled investors in violation of Wall Street regulators' rules. That's according to 3 people with knowledge of the probe. Snap CEO Evan Spiegel says the U.S. should develop a framework for dealing with national security issues in the tech sector. Speaking at the Bloomberg Technology Summit, Spiegel said the defined measures will be important for the U.S. companies that do business with the likes of China. He was commenting on the recent divest or ban legislation targeting TikTok.
What I think is really important is that we come up with a durable framework to deal with these sorts of national security issues. I think the United States has recognized that there are these issues, but has sort of been dealing with them in sort of an ad hoc, one-off kind of way. And I think that has real implications for the economy looking forward. If you think about how many businesses in the United States, have a relationship with China, whether or not they manufacture there or they sell their products there, I think it's going to be really important for those businesses here in the United States to get a lot of clarity.
Coming up, Israel declares to fight on its own. Prime Minister Netanyahu striking a defiant tone against President Biden on the war in Gaza. More on the story next. Context matters on Bloomberg.
I've known Joe Biden for many years, so 40 years and more. We often had our agreements, but we've had our disagreements. We've been able to overcome them. I hope we can overcome them now, but we will do what we have to do to protect our country. If Israel has to stand alone, we'll stand alone.
Israeli Prime Minister Benjamin Netanyahu there standing up against President Biden on the war on Gaza. Now, this was after his U.S. counterpart warns of a suspension on additional shipments of offensive weapons if Israel attacks Rafah. Mark Champion is with us, Bloomberg Opinion, joining me now. So the international cost to Israel of sending the IDF into Rafah is clearly rising. Mark, what is the Israeli argument for why they need to continue to do this?
Yeah, I mean, it's very clear that they reject the idea that the cost of doing this, that they will end up with a strategic defeat from any kind of, battlefield victory in Rafah. What they say is that, everybody's telling us that we have to look to the sort of day after plan. They say we don't have one. They say that we need an alternate administration to put in place instead of Hamas, that we need to get peacekeepers or some other force to come in and so that we don't have to occupy. That can't happen, the Israelis say, if there are 4 battalions of Hamas troops intact with their commanders in Rafah. They will simply take control, and they will make it too dangerous for anybody to kind of move in and try to disarm Hamas or to take control. So that's their point of view, that this just has to be done for any kind of longer-term scenario that everyone says that Israel should be developing to take place.
And what about the million? The million Palestinians? It's a country that's ravaged. There's very few places to go. This is the result of war. We understand that. But you have this deep concentration in Rafah. And I want to know what has been said about that. I mean, the U.S., this is part of the U.S.'s position, isn't it, in terms of pushing back on Benjamin Netanyahu. Where can they go? What is the reality on the ground?
Well, the reality is going to be, it seems to be almost impossible. It has to be said that they did declare an evacuation zone east of Rafah. The UN says that about 80,000 people have moved out in the last couple of days. In fact, a Sky investigation, using satellite imagery, says that quite a lot more than that have moved. Mainly from the evacuation zone, but also from other parts of Rafah. Most of the people who are there, most of those million people, are not from Rafah. They came from other parts of Gaza, so they're familiar with what happens when the Israelis move in, and they are starting to move out. The problem really is that the Israelis have this time, built some infrastructure for them to go to. They bought some tens of thousands of tents. But it simply isn't going to be enough for the numbers that we're talking about, and it seems like not on the time scale that the Israelis have in mind.
Okay, well, it's certainly going to take more than tens of thousands of tents to cover that number of people. Mark, let's see how the situation evolves over the weekend. We'll return to this, I'm sure. Mark Champion with the very latest from Benjamin Netanyahu. A quick snapshot of what's going on across the commodity complex this morning. There are a number of things to keep an eye on. You've got copper above $10,000. Is it FOMO? Macquarie warns that it's a FOMO-driven rally. There's a risk of a pullback in that, but there is something of note. Supply worries seem to be faltering. LME inventories are dropping. Gold is bid by 1.125%, up the most in 3 weeks. We're at the highest in 3 weeks. Again, calls out there for $2,500 from ANZ, and crude up 0.5%. It is Bloomberg Brief this Friday morning. I'm Manus Cranny in New York. Let's get you up to speed with the front pages from around the world. This is what's making the headlines. First up, it is the Financial Times. American public pension plan CalPERS is mulling a vote against Exxon CEO Darren Woods' re-election to the board. The shareholder discontent brews over a lawsuit. Exxon has sued two climate-focused investors. Next up, it is on the front page of the Journal. The former presidential hopeful Nikki Haley has no plans to endorse Trump, well, at least not yet. Now, we understand that she met some of her biggest donors. That's on the slate for next week, but it's not expected to discuss her political future, I should say. And UBS considering a new reward system for their investment bankers. Refer your wealthy friends, bring them into wealth management. That's it. So the bankers in Asia and Europe could be in line for a little bit of a payout. Let's bring in Charlie Wells to discuss this. This has all the hallmarks of Iqbal Khan, really back in charge. This is a very Credit Suisse orientated flavor, bringing it to UBS live.
That's exactly right. I mean, this is not something that UBS has previously done, but Credit Suisse and Khan famously did. So they used their more muscular investment bank, particularly in the United States, to bring in clients that they effectively helped make rich with their deal making, with their advisory, and bring them into that wealth management fold. Now, what is also really interesting about this is this shows that Sergio Ermotti does not just want to integrate Credit Suisse and UBS. He wants to grow that combined business. business. And this is the way that he wants to do it. He wants to do it by using that investment bank, by potentially, according to people familiar with the matter, bringing in some of those wealthy clients. This is evidence of that strategy potentially coming to play.
Well, there's no doubt about it. I mean, Iqbal Khan, was many things were said about his desire to grow the lending book more aggressively, perhaps, than the parameters within UBS. But what could go wrong?
I mean, Manus, I'm thinking of something. It starts with an A, there's an R in the middle, and it ends with Kegos.
Yeah.
So, client relationships are important, but so is client vetting. And I think the sort of ironic thing here is that, this is UBS looking to investment banking. Of course, coming from Credit Suisse, that was one of the more troubled units of that bank. There's also a lot of competition here, right? I think we talk about wealth management in the banking space almost as a panacea, as a sort of cure-all or a huge growth driver, which of course it is. There are trillions of dollars at stake here, but everyone wants to get in on this, right?
Exactly.
And lastly, there's that cultural element as well of, you're potentially rewarding the investment bankers in that clubby private world of private banking.
Indeed. And that is exactly what the chairman wanted to push back against in terms of that perhaps culture from Credit Suisse into UBS. Coming up, we're going to catch up with the CEO of EDP. From our global headquarters in New York, I'm Menace Crenny. Let's set your agenda. A Bloomberg scoop: the U.S. is set to impose tariffs on Chinese EVs and strategic sectors as soon as next week. Benjamin Netanyahu says Israel will stand alone in the fight if it must, after Biden's withholding of bomb shipments. Plus, details of Apple's ambitious plans to infuse its devices with AI capabilities. A very good morning. We got there. We got to Friday. The only thing that blew up was really the jobless claims yesterday, which infused a narrative of rate cuts, potentially more back on the table. Tesla has been higher this morning, up by 0.7%. We're seeing news flow come through that BP may be interested in the supercharger assets of Tesla. And then we have a headline from Elon Musk saying he's prepared to spend $500 million on, you got it, superchargers. So go figure. 500 people were let go from that unit last week. S&P futures up 1/3%. You're going to need strong delivery on your numbers. Otherwise, this market really does punish you. GDP, the GDP Now survey is over 4%. So you've got a strong economy, rate cuts narrative abound. Bonds are fairly flat. The bid to cover ratio on the 30-year auction yesterday was fairly solid. $25 billion worth of bonds were taken. Mary Daly asks for more time in terms of the narrative of when to cut. Oil is better bid this morning. You're above your 100-day moving average on Brent. 1.5% is what we've put on over the past 3 days. Goldman's talk of an extension in the OPEC Plus cuts at the June meeting in Vienna. So oil is bid. We're fairly risk on as we start this trading day on Friday. Let's turn our attention to the world of renewables. The utility company, EDP, says investment will decelerate over the next 2 years. This as it focuses on its top projects. The market liked that. EDP is one of Europe's biggest wind energy developers with projects across the region and here in the United States of America. Joining me now is Miguel Stilwell de Andrade, the CEO of EDP. Good to have you with us. Look, the market gave you a bit of a cheer yesterday. You're becoming more focused on what it is that makes money. But you did cut your guidance on the renewables business by 25% over the next couple of years. Was that just a truth and reconciliation moment for you? Or what is it that led to that quite dramatic cut?
Hi, good morning, and Manus, it's a pleasure to be here. I'd start off by saying that it's really reacting to the current market environment. I mean, clearly we're seeing energy prices have come down dramatically in Europe from where they were sort of a year ago or 2 years ago. And on the other hand, we have interest rates that higher for longer. And I think that's particularly true in the US. Even in Europe, there's some expectation that they might come down. But in any case, we are seeing this cost of capital being higher. And so we're obviously very focused on keeping a solid balance sheet, BBB balance sheet. We have a strong dividend policy as well that we're maintaining. And so we're adjusting our investment basically to these two factors. And basically, it's still going to be a very strong growth plan. We're talking about 17 billion euros that we will be investing over the next 3 years, and a very strong compound annual growth rate, sort of in the double digit.
Look, your headwinds are significant. Spanish electricity prices registering negative for the first time. Portuguese prices are on the floor. I mean, are you trying to call... Nobody can call the bottom of the top of a market. I'm not going to ask you something as banal as that. But is this the worst kind of case scenario that we're in at the moment? Do you see this as being a floor in prices?
Well, I think it's down to levels that we had sort of pre-pandemic and pre-energy crisis. And so I think it's levels that we could consider would be sustainable over the long term. Now, obviously, prices can fluctuate, and who knows where they'll be in 6 months or in a year's time. It could be up or down. But let's say this is a more reasonable level. Clearly, a year ago, we were seeing much higher prices, not only at the time, but also for 24, 25, and 26. And that has come down significantly. And so I'd say at these levels, we feel comfortable that, you know, it won't deviate much further from this, certainly not on the downward side. But let's see. This is very dependent on gas prices as well as in Europe. Mm-hmm. And gas prices, as you know, have also come down dramatically in Europe as a result of much lower demand on one hand and a lot more supply, I think, than people were expecting, and a much milder winter.
Or perhaps it is that the rampage of the hedge funds in the electricity and the gas markets has abated. We can debate that on another day. I'd like to focus on the US. Obviously, here we have the Inflation Reduction Act, much fanfare and delivery, and the distance is quite phenomenal. But when I look at the meltdown in the clean energy sector here, the stocks in the clean energy sector here over the past year, how much of a cautionary tale is that? I mean, that's a market reaction, but how much caution do you have about expanding in the United States of America?
So we think the U.S. is a fantastic market for renewables. We've been in the U.S. since 2007. We're one of the top 5 renewable players in the U.S. And we continue to see very strong growth prospects going forward, particularly with the Inflation Reduction Act. I think there was quite a lot of hype, you know, as cycles go. There's a lot of hype back in 2021 and 22, obviously with the new administration coming in 21, and then the Inflation Reduction Act in 2022. And so that was built up. I think things have recalibrated. And what we're seeing is that the credible players, such as ourselves, I think, you know, we are in here for the long term. And so we didn't maybe get carried away with the hype, but we're also certainly not depressed. And we continue to see very attractive projects. Perhaps this is one of the better times that we've seen for investing in the U.S. Very high single-digit IRRs, you know, so for the wind and solar projects and also for storage. So actually, we're quite optimistic about the prospect going forward in the U.S.
Well, you talked about a strong balance sheet, and then the corollary to that is you must be ready to use some of the dry powder on the balance sheet. So are you ready to bid for energy projects here? If you have to have a choice on how to grow the business here, will it be through bidding for, let's say, wind energy offshore? Is that the plan, to be more deploying of capital here in the United States of America?
So about 40% of our overall global investment goes into the U.S. And as I said, we've been in the U.S. since 2007. We're based out of Houston, but we've got projects in more than 20 different states. And we are particularly strong in wind, but we've got a growing presence also in solar and in storage. We also have offshore projects, particularly up in Massachusetts. We have a big project called South Coast Wind. We've got one in...
And are you ready? I suppose the question is really, are you ready to actively buy more assets here?
Not buy, but develop. We've been investing. So organically, we have a good portfolio, and that's what we're focused on. We're not focusing on buying other assets. We're focused on developing our own assets, and we think that's where we'll get the best returns.
Which then takes me to get your opinion on the Inflation Reduction Act. Much fanfare, much hype, as you say, a couple of years ago. Reality and delivery is something different. In a succinct answer, if you can, is the Inflation Reduction Act fit for purpose? Is it working efficiently? You've interacted with it. Give me your take.
Definitely very fit for purpose. Long-term plan, gives predictability and stability in terms of the investments for renewable companies like ourselves. And so clearly something that was a big consequential piece of legislation that we fully support.
The risk is this, that you have either Biden Mark II as we go into 2025, or we have a new administration. And with the potential of a Trump administration, there are risks to the IRA. Would that materially, do you think that could materially impact renewable investing in the United States of America if there's any step back from IRA? Or would it materially impact you? You've said to me, I'm here for the long run. But if the policy changes, you must adapt.
For sure. But I mean, we've invested throughout the Trump administration, and we had a very successful run also in terms of growth during that period. So definitely the Inflation Reduction Act is something that we think will be there independent of the administrations. There's a strong, I believe nowadays, bipartisan support for the majority of it. They might play with it some at the margin. But if you think that 80% of the investments coming out of the Inflation Reduction Act are actually going to Republican states, I think that says a lot about, say, the buy-in in terms of keeping it sort of in place. Some of our biggest markets are Texas, Indiana, deeply Republican states, and where we're creating jobs, we're creating employment, sort of cheap energy, economic growth. So why wouldn't you keep it?
Well, if it's not broken, don't. Some people say don't tinker with it. Just let's close off here. We debate inflation every day on these TV shows. We get together with CEOs like you, and we get a sense that the supply side of the inflation narrative, those bottlenecks, has abated. If I look at your supply chains, do you have enough of everything that you need on solar panels and wind turbine equipment? Is there any kind of shortages for you that can perhaps stymie your development and your growth plans?
I think the industry is in a much better place now than it was over the last 2 years. I think over the last 2 years, particularly in the U.S., there was a severe shortages of solar panels, for example. Most of them were being imported. There are things like the Uyghur Forced Labor Protection Act, which imposed much more stringent requirements on the importation of solar panels, and that slowed down substantially let's say the buildup of that supply chain. That has now changed. We've pivoted. We now have several suppliers, most of them U.S.-based. And so to the extent that we can continue to supply our projects in the U.S. with U.S.-made panels, I think that's a big part of de-risking our supply chain. Obviously, there is also an issue around price. So it's not just a question of, can you get the quantities necessary, but what is the price?
Yeah.
Obviously, the U.S. has imposed also tariffs, and so that has driven up prices. In any case, we are seeing people relocate. And the IRA, the Inflation Reduction Act, provides a lot of incentives for projects and panels and supply chain, so that is actually based in the U.S. So over time, we think that the costs will continue to come down, and it will be competitive as it is with in other regions and other parts of the world.
Miguel, great to get you on the show. When you're in the States, you do so much business here. You must be through quite often.
Yep.
Next time, please come and join
Yeah,
Danny and myself.
often.
Good to have a conversation. It's going to be a punchy old year. Let's see how the future plays out for you. Miguel Stilwell de Andrade, the CEO of EDP. Coming up, Apple's new strategy will discuss its sweeping effort to infuse its devices with AI capabilities. Context matters on Bloomberg. It's Bloomberg Brief. I'm Menace Cranny in New York. President Biden is said to impose tariffs on China's EVs as soon as next week. That's according to people familiar with the matter. Now, it represents one of Biden's biggest moves in the economic race with China. For more on this scoop, let's bring in Bloomberg's Oliver Crook, who's actually down at the Formula E circuit in central Berlin. More on the reason why he's there in just a moment. Ollie, you get all the choice locations. But you've spoken to a lot of these Chinese EV makers over time. How big a problem is this going to be? I mean, we don't exactly know the details yet, but give me your take.
Yeah, so Menace, we've spoken to, the likes of BYD, NIO, a lot of these car makers that have really been putting a lot of their energy into pushing into here, the European markets, and that's in large part because this has always been seen as a risk. While this is a significant move, it's perhaps most significant in terms of the political signaling, i.e. how Biden is going to position himself vis-a-vis the Chinese politically and economically. But for many of these car manufacturers, they honestly were not even trying to touch the United States market because it just was seen as too complicated, too difficult, which really emphasizes how important Europe is for the likes of BYD, for the likes of NIO, for all of these car companies in trying to push forward. So maybe the thing to look forward to, Menace, is that EV probe that's going on right now from the EU Commission, which we will get preliminary results from at the beginning of next month, which could mean tariffs as soon as July of this year in Europe, which I think would be a much more significant development.
Yeah, well, Ursula von der Leyen in that meeting with Xi Jinping and Macron just the other day, really sort of emphasizing about excessive dumping, etc., and excessive moves by China. So, come on then, you're on a racetrack, you're getting the glamour gigs. My days of this is obviously past. You're at Formula E. I'm more Formula One myself. But you're in Berlin. So talk me through Formula E.
You are Formula One, Menace.
I know. But look, talk to me about how fast, this is growing in terms of the EVs market. Ollie.
So listen, man, as we're right in the middle of the season here, we're in Berlin, so they just came from Monaco, and next stop is Shanghai. So they're really trying to position themselves as a global business. As you can see behind me, all the teams in their pits, they're getting ready for the race tomorrow. What's interesting, though, is, Manus, this is a 10-year-old business. This is barely, sort of in existence as far as a sport comes, and trying to build a sport from zero is very challenging, particularly when you're going up against something like Formula One, which has a huge established history with all of this sort of fan base and billions of dollars worth of sponsorship. But the opportunity is there too. A lot of these cars, Manus, there is technology changing on this every single year. The next car they're going to come out with is going to be 30% faster in terms of acceleration. It is going to be faster than the Formula One car in terms of just acceleration. So I spoke to the CEO, Jeff Dodds, about how do you compete on a totally brand new sport.
Very large investors in Liberty Global, Warner Brothers Discovery. But as I say, this is a business that's only 10 years old. So they're investing for what they believe the future of this business could be. I think fan base, though, is a good proxy. So when I started about a year ago, the fan base in Formula E was about 290 million fans globally. As of now, the latest time we did the big survey, it was up to nearly 400 million fans. So around 30% growth in a year. This is a business that's growing exceptionally quickly.
And in terms of the other thing that you need to do is also attracting other OEMs, other manufacturers to the sport, right? There was Mercedes, BMW, they stepped back. What I'm surprised by is that there are not more Chinese automakers who have really dominated the EV race. Are you in conversations with them?
Oh, yeah, of course. So you have the big Chinese automotive groups. So BYD now becoming prevalent across the world. In fact, I think the biggest EV manufacturer now in the world. You've got Geely Group.
Could you see a BYD team in the next couple of years?
I could absolutely see a BYD team. I could see a Geely Group team like Lotus or Zeekr, SAIC, who obviously own brands like MG across the. So absolutely, I can see a Chinese team. We actually have two Chinese teams here. We have ERT, but we also have Envision.
What about a Tesla team?
I think Tesla's unlikely, and I'll tell you why I think it's unlikely. So all of the teams here are racing on a common battery. So I'm not sure that Tesla would be so keen to run on a battery that isn't their own. The second thing for Tesla, I would say, is they are the dominant force in the electric vehicle manufacture. They were the people that started it all pretty much with the Roadster. I'm not sure, they don't need the exposure, so they don't need the PR around it. And the final thing I would say is a lot of the teams here have been racing in Formula for a long time. Tesla would not be competitive from day one, and I'm not sure how that would fit with their.
That sounds like a challenge to Elon Musk. It's always a dangerous thing to do.
It's never dangerous. I would love Elon to call me. I'm just not sure it will be top of their list.
So maybe the headline there, Manus, is that Tesla would not be competitive. Always a dangerous philosophy to kind of challenge Elon Musk. But I thought it was interesting to say that, you could have these Chinese OEMs coming to this, really a BYD sometime soon. And just to tie it back to the EV story more broadly, this is exactly the kind of exposure that the Chinese automakers would want to get a foothold within the European market.
Yeah, you just make sure that you focus on reporting, reportage. You're not Lewis Hamilton, and you're not hopping off to, Formula EV. Ollie, great work. And a great package. Enjoy the weekend and the sport. Oliver Crook in Berlin. Well, the tech companies have a strong focus on artificial intelligence, and the guests at Bloomberg Tech Summit had this to say about the future of technology.
I think 2024 is going to be a monumental year for AI.
The current generation of models that we're seeing out there is still in the $100 million range. I think all of this can scale to the $100 billion range.
Llama 3 should not be open source. It's a national security hazard to open source.
We are trying to be the most responsible actors that we can be, and think about what are the potential externalities that could be caused kind of accidentally by this tech.
I also worry about the overhyping of human extinction risk. I think that is blown out of control.
I feel like today, every single company has to build their own AI. Otherwise, they run the risk of being left behind.
Well, let's stay in that space. Apple will deliver some of its upcoming AI features this year via data centers. Now, it's equipped with their own in-house processors. It's part of a sweeping effort to infuse its devices with AI capabilities. Mark Bergen is with me. So this is a curtain raiser, potentially, on what Apple's ambitions are within AI and their own processors. Talk me through it.
Yeah, this is something we're expecting them to lay out their strategy in June for the developer conference. We'll just continue with the Formula E theme here. It's like Apple has the most attractive car in the race. but there's a real risk that they're going to be lapped by Google and Microsoft. And this is a world in which these, it's our Bloomberg Technology Conference yesterday. This is a world in which a lot of people in the Valley are imagining, and certainly Apple's aware of, the future where AI is living a lot more on our devices, where there's something kind of beyond the iPhone that is driven by AI, something that we've reported that Johnny Ive, the legendary former Apple designer, is maybe working on with OpenAI's chief. And this is, one way to think about this change that we talk on the server chip side is they're basically kind of turning Siri from an also-ran into something that really is competitive with ChatGPT and this next generation of AI products. And that means they have to use these much more powerful chips that are kind of provided for the cloud rather than on the device themselves.
Now, I mean, I think you put it very, very nicely in terms of Apple being lapped by the others. I mean, are the others so far ahead in the sort of the chip side? But, Apple can make up for that in other ways, I presume, in the AI competition.
So on the chip side, Apple certainly they tend to do things pretty vertically, right? That's something they prefer to do. We think about this if you think about it in search, though, Apple obviously has its own search services, but they rely on Google, this multi-billion-dollar year deal. I think we've reported that they're in talks with OpenAI and Google as well to kind of bring whatever Gemini, ChatGPT, this our next generation of AI-powered search to iPhone devices. I imagine there's a world in which Apple wants to do that themselves, right? Like some services revenue is something that Tim Cook has been talking about a lot. If you think about the future of Apple moving beyond the iPhone, it is having the AI that can work with their VR devices, whatever they're doing in automotive, whatever they're doing sort of in the home devices. This is critical to the company, and they've been hiring a lot. They have, Google's former AI chief is now running their division.
Okay.
But it's something that's sort of a cultural clash that the Apple's had to work through.
Mark, thank you so much. Mark Bergen there on the Apple AI story. Coming up, we'll set your agenda for the trading day right here on Bloomberg. Context matters. It's Bloomberg Brief with me, Menace Cranny in New York. A look at what's ahead for you today. The ECB, they will publish the account of the April policy meeting, 7:30 a.m. Eastern. All eyes down on that. And more Fed speak. Bowman, Goolsbee, Kashkari, all talking throughout the day. As Daly, of course, yesterday called for more time. Then you've got the University of Michigan sentiment numbers. They come out at 10 a.m. Eastern. All eyes down on that. We've had the flow show through from Bank of America. We'll talk you through that in a moment. Let's just show you what's going on with a couple of individual stocks. We've mentioned Tesla through the morning. It's up nearly 1%. Musk, we understand, will now spend $500 million on supercharger network. Now, this is as BP. We understand BP's electric vehicle charging arm is eager to snap up the Tesla supercharging sites across the United States of America. TSMC up 3.33%. Sales are jumping on sustained AI demand, so that's going quite nicely. NVIDIA, FPT acquired its first NVIDIA server in part of its plan for an AI factory in Vietnam. That's it for me. Danny will be up with Jonathan shortly in surveillance. Equities are bid 3 weeks in a row, and you've had the biggest inflows into the bond market since July 2021 on a no-landing scenario. That's the Bank of America, Michael Hartnett. The Flow Show, no landing, and the money flows into bonds. Good morning from Bloomberg.